Is the rally getting overextended here?
Well, we're very overbought, but I just like to put things into perspective because whereas Mr. Trump says he will make America great again, so far this year, numerous foreign markets have done much better than the U.S., including, by the way, Mexico, Brazil anyway, and in Asia we have many markets that are up year to date by 10% and more. So I think that the question of an asset allocator is he will always have some money in shares. The big question for 2017 is what will perform relatively well, emerging markets, Europe or the U.S. I think if you look at the valuations of the U.S., and all the Super Bowls, they may be right and the market continues to go up. The market also continued to go up between December 1999 and March 2000 and then gave back essentially 5 years of previous advance. So that the market goes up doesn't make me particularly bullish when the valuations are out of sync.
What do you think the exact trigger will be? I know it's hard to say, but what do you think is the most risky in terms of what the market is looking at right now?
The most risky is very simply that the market starts to go down. And as it goes down, it will start triggering selling. And then it will be like an avalanche. You don't know what the catalyst will be. After the market will have gone down, people will say, well, this triggered the decline or that decline. But nobody knows exactly why the market peaked out in March, on March 21st, 2000. Nobody knows why the Japanese market peaked out in December 1989, and so forth and so on. We just don't know, but something usually pushes markets down when they are very overbought and when sentiment is as bullish as the gentleman just was saying before you had me on.
If you think that the U.S. equity market is overbought, is there anywhere particularly that you'd like to be investing right now overseas?
Well, I think that emerging Asia, China, looks quite attractive. For how long, who knows? But I think for the next 3 months, money can flow into China. The economy, surprisingly, has begun to do quite well. We see that in retail in Hong Kong, we see that in the hotel industry, and we see that in the demand for commodities. So if you ask me what will do relatively well, I think the Asian markets. Number two, what has done relatively well are selected commodities. Last year, iron ore and zinc were the best performing assets. I think this year, copper has been very strong. Gold last year was up 9%. This year it's up again 9%. So I believe investors should actually be investing in resource stocks. Because when you really look at Trump and his administration and the way the budget is, I think further money printing down the line is inevitable. Maybe they increase rates a little bit here in March, that is possible. but the bonds market will probably have discounted that already. So bonds are relatively undervalued compared to equities, and emerging markets are relatively undervalued. Resource stocks are undervalued. And I think that consumer staples are also reasonably priced, as well as REITs. I have a large exposure to REITs in Singapore and Hong Kong.